Well, since the coronavirus outbreak earlier this year, the economic shutdown has led to more than 50 million unemployed Americans and an average of more than 1 million new unemployment claims each week. So with so much uncertainty, it's really difficult to make financial decisions about your life moving forward. That's why we're bringing in Stacy. She's the Director of Portfolio Strategy at Optimal Capital to discuss just how to navigate this uncertainty. So, Frances, the first thing I want to ask you is to sort of give us a snapshot of where we are in terms of the economy. From the ground, from Main Street, it's sometimes hard to tell. I know many people that are working and getting a paycheck and working from home, and it's fine, but many other people are not. They were in industries that we don't know when those industries will start up again. And then you look at the stock market, and sometimes it's fabulous, and every once in a while it takes a dip, but it often seems to be disconnected when it comes to what's happening on Main Street. So where are we in terms of the economy and the health of the economy?
Well, the economy is actually lagging for all the reasons that you stated. It is the employment picture that is pretty dire at the moment. And it is kind of a confusing time because we read articles like I read this weekend where a guy had $10 in his pocket and was trying to get from DC to New York, and he was evicted, and his trying to carry all of his belongings with him. And that is unfortunately a sad state of affairs that is actually growing. The things that we are facing right now is that the PPP money is running out. And even some of those companies that were temporarily propped up by the Paycheck Protection Program may end up going bankrupt anyway and may end up laying off those employees anyway. So right now in the stock market, we have a completely different picture. And it's such a strange thing to look at because our earnings, which is how stocks are priced, is down, they're down 10.6% with having most of the S&P companies reported. And yet they beat expectations because people were expecting so much worse by 22%. So clearly, when you see which one of those numbers that the market is trading, it is the beating of expectations, which is truly disconnected from the economy because that other number is so dire. So how do we go forward and reconcile both of these pictures? I do think that the fourth quarter is going to be more volatile in the stock market because you will have some kind of a reconciliation point. The number of corporate bankruptcies being almost at a record. We're nearing global financial crisis, numbers. You have credit markets, loans coming out of forbearance. Can people pay those? The unemployment picture is getting worse. You have airlines now have the ability to lay a bunch of people off. And so these are all the sort of things that are hanging in the balance. And I think the reason that the market is relatively docile at the moment is because nobody has any idea what those numbers are going to look like. We have no idea what the default rate's going to be. So I just feel like we're sitting in the calm before the storm.
Do we have any idea what a timeline will look like, when we might know that the dust is going to settle? My husband's in real estate, and there are people that need to make decisions. They need to move to other cities. They need to sell their home or buy a new home, and they want to know, should I do that now or should I do that a year from now? Because a year from now, things will definitely be more stable. Can we even predict that?
I don't know that we can even predict that. And it is a really interesting thing because people are making drastic and permanent moves, assuming that this is a new way of life. I do think that some of the carryover from the coronavirus will be a new way of life. I do think offices that were forced to go virtual have saved a lot. We're able to cut a lot of costs. And, why are they going to pay for that office space in Manhattan anymore, which has such a huge premium on it? So I do think there's going to be a lot of permanent moves. For people who have to move right now, then go ahead and move. But for people who don't have to make that adjustment immediately, for me, I say, wait, why? Well, even though real estate prices, particularly in more rural areas or states with lower taxes, are going up, and you kind of get into that fear of missing out and you want to get in there, the default rate on mortgages that are currently in forbearance is probably going to mitigate some of that price going up. So I would say at the end of this year, I think we're going to have a pretty good idea of where coronavirus is going to shake out in terms of both the equity markets, the real estate markets, the unemployment picture, whether or not we have a viable vaccine on the way, those sort of things that build confidence. And I think so by the end of this year, for me, I wouldn't buy any real estate until next year when all of that has sort of, wound through the markets.
Lastly, I want to ask you about the 401k. You're close to retirement. Should you look? Maybe your 401k is doing well. I don't know because of the way the stock market is. What should you be thinking about in terms of your 401k? Maybe you're not close to retirement. You need money. You're thinking of dipping into your 401k. What would you advise?
Well, the thing is that if you're not close to retirement, you have a lot more leeway of leaving it in there. It probably is doing relatively well off of the March 23rd lows, and it just depends on what your allocations are to what sectors, because some sectors are underperforming other sectors. You might leave it if it gets crazy in the fall. You might reduce some of your positions so that you can manage how much of the drawdown that you would have if we have another rollover in the stock market. And there are lots of cash and money market funds in that. Of course, we do have inflation going up and cash doesn't do well, so I would kind of wait to see if some of that turbulence that I'm predicting kind of brews in the fall. If you are in the nearer term, I think you should be half in cash or government bonds. There are very few things that you can say in financial services are guaranteed. Government bonds is one of them. I realize the yield is ridiculously and historically low, but just not losing the money is so important. You cannot be close to retirement and risk a drawdown in your portfolio like the one that we've seen in March or at the end of 2018, or goodness forbid, a 50% drawdown that you saw during the global financial crisis. We do have a lot of risk in the marketplace. As far as taking money out of your 401k, just don't do it unless you have to. And if you have to, you have to. That's life. You're lucky you've got it in that scenario.
All great advice. Frances, Stacy, thank you so much.
Thank you, Anne Marie.